What's up, guys? It's Rob here, and today we need to talk about the crazy stuff that's going on today in the stock market, particularly at 2 p.m., because that's when the Fed is going to be meeting and releasing their interest rate decision, whether or not they're going to be raising rates by 0.75% or more or less, and that's really going to shake up markets. I'm going to explain why we could be seeing a ton of volatility in the markets today around 2 p.m. when the Fed does release their interest rate decision. They'll also be releasing a statement, their economic projections, and doing a press conference right afterwards, and that also has the ability to really shake up the stock market. Now, we've got a chart of the S&P 500 right here, and you can see that they've actually been doing pretty well today, right? It's been moving up. So people are expecting, at least, that this meeting and that this interest rate decision will be in line with expectations. Currently, people are anticipating a 0.75% rate hike, bringing us from 2.5% to 3.25%. Now, this is very important for markets because as the interest rates go up, the ability for investors to make money in the stock market actually goes down as interest rates are higher because they can get a larger return on their capital just leaving their money sitting in an account, earning that interest rate, than potentially risking it in the markets. In addition, businesses have to pay more to borrow money. And so it's kind of a double whammy for the stock market. It's really not good for stocks when interest rates go up. Now, you can see that the reason the Fed is doing this is to combat inflation. And we've actually, according to the numbers that they've released, the CPI, and I know a lot of people do disagree with the CPI. They say inflation is much higher than that. I've noticed that a lot of prices, at least for things that I'm buying, have been higher than what the CPI says they should be. But regardless, the CPI is what Wall Street uses, and so it's what affects the stock market. And so for the purposes of what we're talking about today, we're going to look at the CPI. And you can see that inflation has been on the decrease, but is still really high. It's at 8.3% annualized, and the Fed is trying to curb this inflation by raising interest rates. And so they're doing it pretty aggressively because this is very aggressive inflation, even when looking at the CPI, not even what people are probably seeing when they go to the store. It's pretty massive. So the Fed is going to try to combat this. They've lowered it over the past 2 months, right? It's been lower, at least, mostly because of oil and gas prices. It was only 0.1% in August 2022, and people were happy to see that, but they weren't actually happy to see that it hadn't been even lower, right? People were wanting this to be even lower, and so the Fed is going to continue on a harsh trajectory of raising rates by most likely 0.75%. And I'm going to give you a rundown what I think will happen to the stock market at these different levels of rate hikes, right? At 0.75%, if they do a less than 0.75% rate hike or more than 0.75%, I think that, most obviously, 0.75%, that's what markets are anticipating right now. I think that would be the most boring of the options. And that's actually not a bad thing, right? The market might go up a little bit. It might go down a little bit. It might just stay flat. And right now, boring isn't necessarily a bad thing because we've seen a lot of action over the past 30 days and a lot of it to the downside. There have been a lot of exciting times, or not necessarily good times, but exciting at the very least, when stocks were plummeting. And we don't want that to happen again. We want stocks, at worst case scenario, to be remaining flat. We don't really want to see them moving down much further. At least if you're an investor right now, you probably don't. Now, if the Fed were to raise rates by less than 0.75%, this would actually, it seems like probably the least likely option, in my opinion. But if they were, it would probably be a big boost to markets. I would expect to see stocks moving up pretty significantly if we did see maybe a 0.5% rate hike or a 0.25% rate hike, because we've already priced in a 0.75% rate hike. And so we'd have some ground that was lost that we could then regain as soon as people realized that wasn't going to be the case. So that would actually be a pretty good situation I would like to see. Not the most likely, once again. I think that this is probably the least likely situation to happen. Less than 0.75% doesn't seem too likely. The Fed has been, at least in with what they've been saying, they're going to be pretty harsh towards inflation. So we could have the potential to see a larger than 0.75% rate hike. The Fed might really be trying to drive inflation down to the ground. And this would have a pretty devastating effect on markets, I think. If we saw a larger than 0.75% rate hike, for one key reason, this would be devastating to markets because the Fed has never actually done this since it started using the federal funds rate as its primary policy tool in 1990. So this would be not unprecedented, but a massive blow to markets. It would probably, drive the stock market down similar to how we've seen over these couple of days right here and here, where it really just got hammered. And I know that a lot of you guys, if you're watching this video, you're probably invested in the stock market or in some individual stocks, and you probably don't want that to happen. That's what I'm hoping doesn't happen as an investor myself. So that's what I wanted to update you guys on. Just let you know that at 2 o'clock today, Eastern time, there's going to be some pretty crazy stuff going on in the stock market, and you guys should probably be keeping an eye on it. Now, that's just my opinion, not financial advice. I was just updating you guys on some stuff that I thought was important. If you appreciate it, feel free to subscribe to the channel or hit the top link in the description to join our investing community. And other than that, guys, I'll see you in the next video. I hope you have a great rest of your day. Bye.